Hi, and welcome to another Capital Connection podcast. Today, I'm joined by the Managing Director of Spartan Group, Mr. Leeor Groen. Welcome, Leeor.
Thanks, Steve. Great to be here.
Now, this entire session is going to be focused around crypto and venture, and we're going to be covering all sorts of facets of that. So as a starting point, Leeor, do you want to give a bit of an introduction to your sort of background and also to Spartan Group?
Yeah, with pleasure, Steve. So thanks for having me on and great to reconnect with the WI ecosystem. I guess really when we look at our role within the industry, I've been in this space since 2016, full-time dedicated to it. Come and go on through multiple cycles, originally from Brisbane myself. Spend the bulk of that time between Switzerland and Singapore, where I'm based, and our offices at Spartan Group is really between Singapore and Hong Kong. So we consider ourselves a leading institutional manager and advisor in the industry based out of Asia. Obviously, this is a very global industry, so everything we do is global. And really the vision for our organization when we set it up was basically three former Goldman partners who came into the space to want to build a platform that emulates, a lot of the things that some of the TradFi banks and institutions are able to do in the sector. So from asset management to investment banking, to really support, help professionalize the industry and work with the best entrepreneurs in the space in achieving their goals and support, the adoption of this sector more collectively and holistically. So we've been on that journey since 2018 as Spartan Group and just continuing on that journey and really just getting started is how we view it. So we're 40 people now globally and really excited, I guess, about the current sentiment in the market.
Yeah, fantastic. Now, obviously, going through your profile, Leeor, you sit across a number of different boards, both in Australia and also sort of internationally as well. Do you want to give a bit of a rundown of some of the companies that you're sort of currently involved with?
Yeah, pleasure. So I've been early in the venture ecosystem as well as specifically in the fintech, blockchain, digital asset space and the many names that it now takes. But really, I think for me, one of the main passions in this space has always been to work with entrepreneurs from day zero. So it's always exciting when you see people grow and scale. And I think that that level of commitment to the space to work with entrepreneurs from day zero is really what led me to stay involved on boards and get involved as an angel investor in a lot of things as well, beyond our own asset management capabilities. So today, sitting on probably four early stage boards. I think specifically one of the ones that I'm most excited about is actually based out of Switzerland, a group called Celeste, CLST, basically creating an institutional credit marketplace. So we've seen many iterations of that in blockchain industry not work. If I look back to Celsius, Blockfolio, and many kind of unsustainable models for this, I think really what was missing there was the institutional pedigree and people who understood how markets worked holistically. And that's really where I think this next iteration of the industry is going to come from is people who have spent decades working in traditional finance, understand how borrowing and lending works as a base requirement to run and manage a book, and then applying that to some of the things we're seeing in this industry with the market participants and also what the technology allows you to do. So that's one example, I think, of cutting edge fintech blockchain intersection project. Another one is also specifically here in Australia, outside of the industry, working with several early stage fintech entrepreneurs and founders as well on what they're building. So really broad group of companies and missions that all comes down to, I guess, future of finance, future of money, and how we take control and manage this in a better way going forward.
Fantastic. And so let's go into the sort of meat of how you sort of look at things and how you assess things. Now, as you mentioned, you've been in this space for quite some time. You've actually been through a range of different cycles, and it's sort of well known that when it's crypto bull market, there's typically a lot of money raised, and then when it's crypto bear market, it's crypto winter, typically that's when all the sort of development, there's a lot of development that takes place and building in that actual time. So now as we're going into the sort of bull market, and I imagine, across your desk is coming a lot of different opportunities. How do you assess those opportunities as far as to try and understand the ones that you want to get behind? I'm talking about the venture related opportunities. So before they're actually listed on an exchange, how are you assessing the projects and how are you assessing the teams behind it?
Yeah, so I think it's a really good point because I think a lot of what we would call Web 2, so classic tech investors and venture investors, especially some of the most successful ones, still managed to get burnt when they looked in and came into the crypto industry across 2021 and the last cycle. I think it's really a key point to acknowledge that this industry doesn't function like many other tech industries and tech sectors. And that for us is really a key point. So when we think of how we look at the market, I mean, especially on our venture side and investment side, we are very much focused on crypto native entrepreneurs and builders who understand the ecosystems they're working with, understand how development works. And that's a very different thing from working at a Google, Amazon, or Apple, and then leaving your product manager role to go and launch a new tech venture doing SaaS. But I think in this sector, the level and threshold for the technology that you're developing in, so I guess the languages that you're using, as well as the way in which you're able to scale and grow, some of the key metrics that you would look for, especially if you're in the what we call DeFi, right? Decentralized finance space, like total value locked within your protocol project ecosystem, versus on the gaming side, which is again a whole different metric and really a kind of retail driven gamers adoption metrics. Again, these are completely different things. So I think for us, what I would say is a blanket general rule is, we look for people who have a deep level of conviction and passion for this sector, coupled with a tech-first approach. So we work with technical founders who are passionate about what they're doing and building, and irrespective of what stage of the cycle they're coming in at, we believe that they will be there for the next 3, 5, 10 years, ideally, right? And I know that sounds like such a trivial thing, but to be very frank, in this industry, there's pockets of opportunistic, capital raising, as you mentioned, timing the market and so forth. It is easy to get carried away, and a lot of people do move in 100 different directions at the same time. And for us, it's really been, a level of discipline to say, okay, looking beyond the current, 6-month opportunity of a euphoric bull run, are we going to be confident in explaining this in 2, 3 years from now of why we invested here? And again, not that everyone is not doing that, but I think the level of discipline in how much emphasis we place on that is really key. So, for us, we really look for long-term partners that we can be supportive of, add value to, and make sure that in 2, 3, 5, 10 years from now, we're still excited about what their initial vision was and how that unfolds in this industry.
It's been one of the things that I've seen quite commonly. I'm used to seeing with founders where they'll be working with businesses across a 5, 10, 15-year period. And it's been one of the surprise to me when I sort of basically, going to different meetups, going to different events, or even hosting some of my own, where you come across some of the people or the founders involved with projects that have just raised capital, and raised a large amount, and they're talking about, and then when you have conversations with them, they're not even talking about that project, they're talking about something else. Yeah. But so it's interesting you highlight that point. But just on the actual sort of fundamentals of a business, like when you're sort of, let's say you're looking at a DeFi opportunity and it's a venture opportunity, you mentioned about sort of the total value. What other elements what are other fundamental elements are you actually looking for in the company?
Yeah. So, and I think, just to contextualize that, what I would say is a great example of this was, especially at that time, Solana. So we actually led the private public sales and the rounds of Solana back in 2020. So before anyone was talking about additional layer ones, Bitcoin was declared dead for the 700th time. No one was looking at new things. So at 2019, this was 19, and at that time managed to scrape together not very much money, frankly, and put together around there. For us at the time, it was really the conviction around who these entrepreneurs were and how transformative they were in their vision for what they wanted to build for this sector, and giving them, a chance to do that really, and supporting them to have a chance to do that. And I think it's one of those things that you see, irrespective of market cycle narrative, irrespective of a Sam Bankman-Fried coming and going, so to speak, of pumping this and many things that happened subsequently there. Ultimately, the fundamentals of Solana today are still being compared, as a legitimate competitor and contender of what a layer one looks like, and put against Ethereum as a potential long-term winner in the space. And I think that's the result and function of, one, what we talk about, specific fundamentals of activity on the chain. But I think really back to our thesis is this industry is first and foremost a technological innovation, and that lives and dies with the developers that it's able to attract. So beyond any kind of metrics that we're talking about, and when we talk about TVL, it's okay, well, how big is the market size once they've built something that's built, like that's used and in production? But in order to get to something that's in production and value adding, someone needs to build it, and the best entrepreneurs, developers, software engineers are working on things for a reason. So, you know, our first thesis is follow where the best technical talent is, find out and support them to do what they believe is the right thing. You know, obviously provide guidance and give it a direction of where the product market fit comes from. But it's really that level of developer engagement is, I think, the precondition for anything that we track on top of. And you know, when it comes to specific DeFi protocols, so borrowing and lending pools, for example, I mean, Aave, Synthetics, I mean, out of Australia, some of the better known, let's say, trading tools as well around DYDX, for example. I mean, of course, you can measure the kind of volumes and flows that are going through the platform. And, you know, any day of the week, things like Uniswap are competing with some of the largest centralized crypto exchanges in the world in terms of the volume processing. And I think that if anything, or so if nothing else, that proves that you can run a decentralized protocol, which is able to compete with some of the largest technological infrastructure that we have in capital markets globally with a fraction of the people, a fraction of the cost, and on competitive basis and terms and speed, for example. So I think the idea that this industry hasn't really solved product market fit, I think is, you know, honestly nonsense. I think where the question really still comes, and, you know, where as an investor, you kind of want to look at, well, so what does the monetization of that look like? And how do we ensure that as an investor in a protocol, you're able to obviously realize your returns on this investment? Because it looks very differently than classic revenue models do on global market infrastructure, for example.
So you mentioned an example like Solana, and I'll just take you quickly back to that. And you mentioned one of the areas that you really look at, and I've heard this several times, that you're really trying to understand where the developers and where the engineers are looking to build and where they're actually building on. So when a project like that comes across your desk, what are the questions that you're asking them to understand who is actually building different projects, and how are you doing your research on the types of projects that are being built on that chain to assess that, okay, this is of interest for XYZ reason?
Yeah. And I think, look, it's a really great question, because especially over the last 2 years, let's say tail end of the last bull run and where we are today, there's been a huge, enormous amount of development on infrastructure, right? And almost to the point where can you, again, and we had the same in 2020, frankly, but can you now hear another, you know, layer 1, layer 2, even layer 3 and cross-chain protocol, all of these things that are coming together. And, you know, for us, it's really a topic of the technology itself at its base case, its ability to attract talent is a key differentiator, but the infrastructure today is already mature enough to be able to do a lot of the things. And then it's really going to not only evaluating what the infrastructure itself is, but it's who's building on it and why, right? So part of any diligence that we would do on a new layer 1 or layer 2 infrastructure, and we've been actively deploying in that space because we're big believers in infrastructure. But anyone who's developing in this space, the first thing we do is go to speak to, okay, so what projects are you working with? Who are the founders and entrepreneurs in your ecosystem? What is their network? Where is their users coming from? What partnerships are they able to build and bring into this chain and ecosystem? Because having the best technological talent and founder in the world on a vision alone is not enough, right? You need the execution, and to build a multi-billion-dollar Web2 business, you know how difficult that is, and that requires so many things to go right. It's not different. It's not that it's easier to make a multi-billion-dollar business in Web3. It's that the way in which it happens is vastly different. The way in which economic incentives are shared are vastly different. And the key criteria against all of those things is always, okay, so who's on this building and what are they doing? And ultimately, that's where the differentiation needs to come in now. And we're starting to see that, right? So I think today, a new entrepreneur coming to the space is looking not only at Ethereum, but layer 2 Ethereum. So we've been early investors in things like Arbitrum, for example. And these are areas now where they're competing not only on their ability to process transactions at a certain speed and attract more developers to help take that chain forward, but really to build on key commercial partnerships and contracts with real product market fit businesses and scale a lot of the applications that we're seeing in this space. And, you know, we're still very excited about that because, of course, you know, Uniswap exists, but does Uniswap in the way that it exists today become the replacement or the killer of the ASX and NASDAQ? You know, maybe not. Maybe there's a better way of doing that. And that's what we're seeing a lot of the DeFi and Arbitrum doing and really going after. So we're very excited about that, but it really is a combination of about, you know, hundreds of things and people coming together to make a success. And you need all of those things to fall in line for it to really take off.
You bring up a good point. I won't dive into it too much, but we're doing this interview the day after, the sort of the announcement come out of the US that the Delaware court has sort of shut down the compensation plan for Elon Musk. And with that become a whole bunch of debate around how the regulatory environment for listed companies is just becoming such a grind. And also at the same time that private markets are also starting to expand because less and less companies are looking to go down the traditional listing path. Like also the IPO market's closed for the moment, but they're looking to stay private, and therefore there's an explosion in that. So it's an interesting time. You mentioned that, and then obviously you mentioned something like Uniswap. Now, you mentioned about the talent aspect. Now, there's two other areas that you sort of talked about, and then you mentioned around the sort of economics and the infrastructure. So when you're going to sense an opportunity from a venture perspective, how are you trying to understand the economics and I suppose the structure of those economics, not just for the company, but also for the developers as well?
Yeah. Yeah, I think it's a really good point, and this is why, I mean, people who are deep in this space spend most of their time not just looking at, is a project, good with its vision, yes or
Mm,
no? Do they have good developers, yes or no? It's okay, and then what is the token economics model? And this term gets used, misused probably more often than not, and a lot of people still struggle to get their heads around what tokenomics is.
mm,
I think the most simplest way of understanding this is it's basically the contract in which you're engaging with your ecosystem, and explaining what that economic model is, right? And the thing that's unique about the way in which Web3 works is that you're doing that at day dot, effectively, when you're issuing and launching your token, or even before it's launched, you've signed people up to support that in a SAFT, for example. And those are things which over time evolve, and I think the industry is still iterating on the way that it works with this. So through every cycle, there are new conventions, which is part of the maturing process of this sector. But ultimately, I think that is the key crux of a lot of these tokens. So even if you have a high conviction over Uniswap's ability to process volumes and compete with the Nasdaqs of the world, is its token incentive model and structure a good investment? That's still a fundamentally different question, especially at the price today, right? And I think that those things need to be decoupled, at least on the venture side. And
mm.
this is more of a blanket generalization. It's a bit of a different analysis and conversation there, because many of the token models and token economic structures are still very early when we get involved. So, and
Gotcha.
part of the
So,
we
so do
do
you
is
do you
help.
invest at both the equity and also on the token side?
We do, we do.
Yeah.
And especially on the early stage side, I think a lot of the things tend to go in a combination of equity with token warrants. So you're kind of getting exposed to both sides if it is a crypto native project that wants to have a token as well.
So just do a little deep dive into that Leeor, because
Yeah,
I've always been fascinated by this structure. So when you're doing a deal, you found a project, you really like it, you can see there's lots of sort of talent around it, you think it's got interesting potential, and then you go into the deal structuring in that. Now it's obviously sort of unique for you in that I know that part of what you do is you also help companies on the capital raise as well as investing as well. So you're at the same time as you structuring or looking to participate on the equity side, you mentioned you're basically getting some tokens as part of it. How does that typically look like? Like, for example, if you're looking to invest 500K into a project, what does that structure typically look like? You don't have to give an example, a specific example of an investment, but just an idea of what it could look like.
yeah, no, I think it's good to be open about these things as well, right? Because I think today there's still so many models of that. So I'll just make that disclaimer before going into it. But there is no standardized way that has adopted and lasted cross cycles. So there's continuous iterations of what the right model is. And the reason why, I think, again, when we look at crypto, it's one sector, but actually is probably 10 different verticals within the space. And when you look at how do you invest in a layer one, for example,
Yeah.
which by design is only a token protocol and network. So there is no real equity value or equity business to hold an investment in. That's a very different thing from looking at applications which are building on chains and therefore maybe have a different economic model and structure. Part of what makes this an interesting, let's say, innovation sandbox is that you still have two types of commercial models and business structures which are emerging. And I think that that's really what's encouraging a lot of the innovation, is that you can do things in multiple ways still.
Mm.
To make it concrete, right? And obviously with more of an Australian audience, I mean, look at things like Magic Eden, right, which is a group of Australian entrepreneurs predominantly who built one of the largest NFT marketplaces in the world. They've obviously raised a lot of capital, I mean, triple-digit millions into their equity business. But as a part of that process that they've gone through, they've also issued token warrants in the case that at some point, as and when, if they do decide to open and issue a token, launch a token, that their investors will also have and participate in that. Now, I think that decision of to issue or not issue a token, has a whole nother world of considerations, and not every project needs a token. So not every project needs to have an equity business behind it. So there's a lot of kind of considerations there, and it really depends on the specific focus that you're going after and where you're at. But our focus specifically at Spartan Group is very much on the crypto native side of things. So we work with, as I mentioned, predominantly infrastructure projects, as well as applications which are building on crypto native rails. So for us, we mostly focus on crypto native investment opportunities, which for us means tokens. So when we look at evaluating token projects, what is the upside and potential? So how we measure ROI tends to typically be on what is the investment potential of the token issuance, which is where we spend most of our time focusing on. We don't discredit anything else. We also look, and we have probably at 30% of our portfolio is in equity investments, but we are largely geared towards and skewed towards what we think is, our version of the decentralized web, which by that definition for us means that we're more exposed to the crypto native side of where economic incentives should accrue.
Gotcha. And I suppose the benefit of that for you guys is obviously if you do have an equity investment, if you've got 30% of the money sort of allocated in the equity side, effectively you can in some ways protect that downside risk as well with the access to the tokens.
I think, I mean, in theory, yes. I think in practice, we always need to acknowledge that there's still the money needs to come from somewhere, right? And if it's a non-performing business, protocol, project, whatever you want to call it in whatever context, at some point, if there's no interest in the business, there's no money for anyone to exit anything. So of course, that token volatility, may provide some exit horizon and some cash for some people. But realistically speaking, I mean, if there's no volatility on liquidity on the token, right? If there's no one trading this, wanting to buy it, then there's also no point of having a sell order in on an order book, right? It's not going to clear either, and the OTC demand for it also doesn't exist. So I think, of course, there is elements that are true, and there are ways to, let's say, de-risk positions which are unique to this sector, which is also why, for us, when we look at our investment cycle and investment horizon, we are more than just venture investors. So we also run a liquid hedge fund, so that we have obviously covering private markets from first check-in all the way through to late stage investments. But we also have a liquid strategy where we're able to form a holistic view on not only what is the token value and price today, or the equity price and value today, but how does this materialize and grow over the cycle, and what is the right time to align the private market with the public market valuations across multiple different, as I mentioned, we probably cover about 10 different verticals within the crypto industry that we are specialists in.
Okay. And on so moving on to the third part where you're talking about sort of infrastructure, like for you, when you're sort of looking at 2024, obviously, 2023 was a good year for crypto as far as, Bitcoin was up 155%, Solana was up 518%. So the momentum sort of begun, and obviously the halving's coming up in the next few months, and the ETFs, the 11 ETFs have just been approved. So, from a fundamental perspective, we are obviously expecting a significant bull run, over the next sort of couple of years, just given to the expected amount of inflows coming in, and of course the reduced supply of the staking rewards on Bitcoin. When you're thinking about infrastructure, what are the different areas of infrastructure are you actually looking at?
Yeah, so I think the institutionalization of the industry is clear, and it's unstoppable momentum at this point, I would say, based on the ETF filing. So whether people like it or not, and the Bitcoin maxis, have an issue with this becoming an investment instrument alone. We could talk about that another time, but there's a lot of reasons why people have the views they have. But ultimately, I think, the idea that regulation's coming, and that this isn't just going to be a black pool of people in sweatshirts running around trading with each other, that's not the goal here. there has to be something more substantive that comes out of this. And I'm not saying that the other things don't exist as well, but a lot of people are in this industry to build a better designed and better executed decentralized web. And with that comes obviously the recognition that all of the laws that apply to capital markets in one way, shape, or form have some level of significance and relevance towards what we're doing here. And if you're distributing securities without the right licenses to do so to people who are not permitted to buy them, then there are issues here. So I think for us, that vision of, yes, decentralized, and yes, there's a path to scale a lot of the things that we're doing because of the way in which this industry works. It's global from day zero. Your target customer base is not the geographic market that you're confined to. It's not 25 million people in Australia. It's 7 billion people globally. How do we service them and engage with them? All of those things, but at some point you need to manage and do things in a well-structured way. So for us, that infrastructure piece is really one of the most attractive areas, because infrastructure in and of itself is not necessarily an area where we're talking about applications where I can come in and put my money on something and buy something which is maybe in one jurisdiction considered a security, in another one not. It's really a core-based infrastructure that you're participating in. And I think one of the innovations of blockchain specifically, if we look at how blockchains work and operate, from a proof of work chain, which is where we started, to proof of stake, I think staking infrastructure and allowing people to participate in economic incentives and governance within a decentralized network, this is, again, not something that anyone really had thought of as a key innovation in the sector, but today it's one of the largest and most significant use cases in this space. Now, the way in which regulators respond to that and how we think about that is still being debated globally, and that might take a few more years. But factually speaking, people are participating in decentralized networks globally. And that's, again, a 7 billion user target market on the retail side alone, let alone institutional. And for us, that those key infrastructure developments are enablers of things that we're very excited about. So infrastructure from layer 1, layer 2 blockchains themselves, to how people can actually access and tap into staking protocols, liquid staking mechanisms. There's been a big thing on Solana, which is one of the catalysts for the growth was not just people being able to stake the Solana token, but the way in which they're able to do that. So we're seeing a lot of these things come together, doing very well. And Eigenlayer, and another example of this, are projects and protocols that have huge momentum over the last year, despite it being a bear market. And what I would say, 2023 may have looked like a good year in absolute terms by the end of it, but for the first 9 months, I don't think many people in the industry really felt like 2023 was a good year, right? So there's kind of a bit of oxygen that came through at the end, obviously building up to catalysts that we're all looking at. But yeah, realistically speaking, it has been a focus on the tech year, and luckily there was a bit of price action towards the end of it.
So what do you see as the biggest movement taking place in 2024? What do you see as the biggest, as the trend as investors? What do you think that we should be focusing on as far as the top trends to look out for in 2024?
Yeah, so I think it's really an adoption game at this point. I think the tech infrastructure is well and truly there, and one of the things, so probably 3 areas that we're most excited about. So one is we spent a bit of time really getting deep into the Bitcoin ecosystem. So Bitcoin as a store of value, I think that's quite an intuitive thing that many people understand today. And whether you believe it or not is another thing, but I think today as a use case, it's clearly there. But really then going a step further and building on top of Bitcoin and treating that as a layer 2. So a very secure financial instrument that people are able to develop on top of. And I think that's a new novel concept that a lot of the layer 2s that started, and we've been early backers of Stacks, for example, which have gone and created a huge momentum and wave of opportunities there. And when I talk about Uniswap, it's kind of a EVM, so Ethereum compatible network and protocol that's built there. We're looking at projects now which are building the Uniswap on top of Bitcoin. So I think Bitcoin is more than just a financial instrument, asset, store of value, whatever you want to call it, depending on who you're speaking to. Ultimately, it's also first and foremost a technological development and innovation, and treating it as such, a lot of the development that's gone into it is unlocking that potential as well. So we're very bullish on this. One of the other areas, and really what we see across this cycle, so maybe not just the 2024 view, but really the end of 2025, 26 view, is really seeing that adoption from a participation perspective with gaming, right? And we have launched a dedicated gaming fund at the end of 22. So we've been in the market with that, deploying capital over the last year. And for us, I mean, that was one of the most active areas. So I think deal making volume in general within crypto was considerably down in 2023, and a lot of dry powder kind of had run out. For us, I mean, that was a very attractive opportunity to take long-term bets on some of the best entrepreneurs focused on the gaming vertical and use case within Web3. And that's something that we think that through this next cycle will really grow and scale in its attention, because again, we're talking about bringing in huge amounts of users who are not only digitally native, but increasingly crypto native. And that's really the trend that we see for adoption of all of the applications that are not just specific to gaming, but how do gamers therefore start using and engaging with many of the DeFi applications and anything which is on the ecosystem and Web3 world. So we're very bullish about the flywheel really starting to happen through this cycle of, once you're in Web3, what can you then do? And the use cases are starting to stack up, and the transfer of value that happens within the web and the internet is really the compounding interest that we see as driving this next cycle. So incredibly excited about it. I think there's really, for us, more a matter of at what pace does this get adopted as opposed to when does it get adopted. And that's how we're thinking about it.
And if you were to look at the adoption now and try and compare, because I always found when Raoul would talk about, compare, or actually maybe it was Kathy Wood, they would compare where adoption of crypto is in comparison to where the adoption of the internet was at different points. Where would you say the adoption, where would you place it, as far as from a time period, from a comparative standpoint? From your perspective.
I know a lot of people try to do this, and I think for me it's always a difficult one, because the topic at the time, and I'll tell you why I find it problematic, but the topic at the time was we didn't have the internet then, right? And I think for us to benchmark the level of growth now against what we had then is also almost disrespectful towards the Web3 space, right? Because we have the internet, so things can move so much faster now.
Correct.
Than they can.
And also have massive network effect.
Exactly.
Through all the different social media services.
Yeah, and when people, it's like charting the adoption of Facebook's user penetration and comparing it to TikTok. Well, I mean, TikTok reached 100 million daily active users at a much faster pace than Facebook ever did. And it's not because it's such a better platform and product, and maybe people would argue it is, but it's because of the existence of things like Facebook and the adoption cycle for people to engage in social media and start sharing content themselves, right? And that's how I really view this. So I think the direct comparison is never really a one-for-one fit. But frankly speaking, the outcome of what's possible here, I think, is so much greater as well than what we had with just the internet.
Well, that's innovation, right? Like if you think about it, I use the example, I was just doing a bunch of meetups. I use the example, if you think about, newspaper and media, traditional newspapers and medias, they absolutely got smashed by, for example, the display. If you think about, in Australia, cars.com.au, Seek, domain, realestate.com.au, etc., they absolutely destroyed what was previously the classifieds area of newspapers, right? And not only did it replace the value, it then, more than 10, 20x that value. So to me, like, I love the comparison, because I like that sort of, if you think about the sort of traditional world, then internet, and then now sort of this Web3, and, if you want to coin it Web4, you can. Effectively, the adoption is... Well, it's always nice to have a rebrand, right? When it's experienced a bit of a down period. But when you see, like, there's obviously that expected accelerated adoption, whether it be the social media platforms, the messaging, the different messaging apps where distribution could just take place. Information is instant. I said, I always feel for people in crypto space, because I absolutely don't know how you sleep because of how things just move so fast, especially the crypto fund managers, right? You mentioned you got a hedge fund. Whoever your CIO is, I just feel for them, because how fast things move, and trying to stay stay up to date with how quickly the innovation progresses. And then you add the fact of obviously the mass adoption, through whether it be sort of trading platforms and the ETFs. Like, to me, is that like, I suppose if you think about an S adoption curve, is it at that sort of early adopter stage now, where effectively it goes through its biggest value increase over the next sort of 2 to 3 years, or is that period still ahead of us?
Yeah, so I'll take the last part first. I think that period's still ahead of us. because I think that the upside of this is still so great. But as with anything, it's a victim of its own success, right? And that's what we see in the run up in 2021, 22. A lot of the bankruptcies that then happened is it is such a promising technology in space. I think at this point, undeniable that there is something there, and people obviously in their nature trying to get involved and participate in this. So all for the right reasons, we hope, for most people, and that's really what I think is, even if we all believe in this, to get to the final state, and not that there is a final state, but to get to a mass adoption state, I think it will still take several iterations to get there. So it's not if you don't do it now in the next 2 years, you've missed out. The same way that, I mean, the invent of the internet and, let's say, tech companies that really started in the wave around the time of Amazon, a lot of people were investing in things like Yahoo and other AOL things that aren't even around anymore.
Well, they're around, just in a much more reduced capacity.
Exactly. So, I mean, investing in a browser today, I mean, almost makes no sense. But what you can do with a browser, I think, has, as Google has proved, and all Internet Explorer, not that anyone really uses this, but what you can do with a browser is incredible. And I think how that links into Web3 when using plugin and extensions of your Web3 as a wallet, effectively the equivalent of what our parents and grandparents would have called bank accounts. I mean, that's kind of how we look at what's possible here as an order of magnitude better, because, as you say, I mean, things are on demand and available instantly. And for us, that's the big thing, right? Is that we've taken markets which function, 9 hours a day, 5 days a week. We've tripled that almost, because now they're 24/7, more than tripled that technically. And we've applied it to literally everything. And that's in itself a multiplier, which is, enormous. And then the way we engage with that, to this point on our CIO, Kelvin, who does manage this, I mean, it's required people to automate a lot of the functions, right? So notifications now and become a lot more native to the way in which information and data is processed, which again is the longer term trend that we're seeing with everything, is we need to automate a lot of the things that we're doing, how we're thinking about things, automating notifications on things so that we are able to pick up and process what's happening, because there's so much information happening and everything's happening in real time. So kind of a lot of things are moving at the same time.
Leeor, really enjoyed this chat. It's actually gone over what I was sort of anticipating, and I feel like I could chat with you for hours more on this topic. I appreciate you going right into the deep dive and giving as much context we have across all these different areas. So, Leeor, thank you very much for your time, and look forward to future conversations. Yeah, thanks for having me. Be in touch. Thank you. Thank you.